Good morning. This is Professor Minton, and in this video, what we're going to do is complete the October entries. Sorry to be late getting them posted, but sometimes that's what happens. Anyway, I will extend the time a little bit in order for you to get this done, and probably move the final due date back another week. Um, that doesn't mean that there won't be other assignments, because I think there will be other assignments that you have to do as well. But once you get started on these, and I'll do some a video for November, and I think what I have done with the other class is I've gone through the first several entries in November and then said, okay, you're on your own, because a lot of this stuff is simply you're doing what you've already done, especially when you get down to the point where you're paying payments and so forth. And so pay particular attention when I get down here around October the 26th on. All right, so on October the 19th, Mary Contrary found a typo in one of the brochures. She agreed to keep and use all the brochures, and I think that's one that we've already done. We issued credit here on the 19th for $175, so I'm not going to redo that one. I just didn't when I went through, highlight it. The next one, we billed Jerry's motorcycle for billboard rent, 5 billboards at $800 each. And so that's also on the 19th, I believe. And so you're going to come over here to transactions, come up to more, drop it down, add a journal transaction. Over here we have on the 19th, so make sure that your dates are right, otherwise your stuff won't come out right. And the description here is sold billboard ads. And under uncategorized expense, you want to drop that down and you want to find Jerry's um, accounts receivable, Jerry's motorcycle. If yours just says Jerry's motorcycle, just make sure you're in the asset side. I say that because I know that there's one that's an asset, but it's also a liability because we buy stuff from them. And if I have 5 billboards at $800 a piece, that's $4,000. Now, the other side, of course, is the income itself, income side. I'm going to drop this down and find print advertising revenue. That'll be under your income section, not your liabilities now, but go on down until you find billboard advertising revenue and click it. If you don't have it, I'm going to go ahead and finish this. But if you don't have it, what you have to do, if you don't have any of these accounts and you're trying to actually do an entry, then what you have to do is cancel, go back, add the account, and then you can go forward and then come back to transactions and actually put it in. So I'm assuming that you actually did follow all of the requirements and put in all of those customers at this point and all the revenue streams. Okay, back over. This is Exhibit 1, of course. And I keep doing this to indicate that I've actually completed that transaction. Billed Joey Johnson Motors for billboard rent, 4 billboards at $1,000. And so I'm going to come back over here, up to more, drop it down, add a journal transaction. This is on the 19th of October. Sold billboard ads. The only thing that really changes here is the person to whom we sold it. And so this is, shoot, I can't remember. Jerry's motorcycle. Oh, Joey Jones. Is it Joey Jones or Joey Johnson? Well, Joey Johnson. So I got to make sure I've got that one. This would be perfect time maybe to show you exactly how it works if I don't have it. Up, I do have it. Just Joey Johnson Motors. If I didn't, I'd cancel out down here. I'd cancel out, go back into the asset section and create it. And down here, it's still billboard advertising revenue. So you come down until you find billboard advertising revenue. There. It is 4,000. And again, just as a reminder, this video works just like any other video. What you can do is you can start it, listen to what I tell you to do it, or stop the video and then do it, and then start the video again for the next transaction. Okay. So notice we've got 4,000, 4,000 here. The only difference is um, who actually owes us the money. And boom. Now the next one is a three-part entry. It's three parts because you have interest expense, you have notes payable current, and you have cash. Now all of these will be done exactly the same way. The only difference being, are you paying the mortgage for the buildings? Are you paying the first payment on the new maintenance truck? Are you paying for the old vehicles that you brought in? What exactly are you paying? And all we're going to do is just change the notes payable side to whatever current notes payable you're making. So on the 26th, paid the mortgage payment. That's the building. And you have to split it between these two things. So come back over here. More. Add a journal transaction. And this is on the 26th of October. The description is paid the mortgage payment. The building. And here you have to open up your Exhibit 2, find amortization schedules. Now here's the building. Okay, this is the interest expense. This is the principal side. Okay, go back over to Wade. Let's get the interest expense first. I'm going to drop this down, and that's all the way down on the expenses. I'm just going to type in interest and see if it comes up with the expense selection, and it does. It's 1,600. Come down to the next line. Now we want the notes payable building current or mortgage current. So you got to come down to your liabilities. And we're looking for mortgage note payable current. And what's that, 692.58? Let me check here. Yep, 692.58. Come over here, add a line. What we're going to add here is the cash outlay. Come down, find your cash. Mine says cash, yours may say cash on hand. Doesn't really matter. And over here, 2292.58. So we have interest expense, you have your current notes payable, and you have cash. And that's the way every single one of these will be done. Back over to your Exhibit 1. Paid the first payment on the new maintenance truck to Joey Johnson Motors. Use the amortization schedule you created. Actually, you didn't create it, most likely I did, to make the entry. Now this is on the new maintenance truck, okay? So I'm going to come back over here and you'll notice I have an amortization schedule for the new truck. And what we're looking at is the interest payment of 715 and 547.17, the principal payment. Okay. Come back over here, more, add a journal transaction. Make sure you change your date. October 27th, paid, first payment on new truck. You don't have to be this detailed going forward, but you probably need to indicate that that's what's happening here so we know to make sure that we're picking up the right one. Again, I'm just going to type in interest expense, or actually I don't even have to get that far. And it's for $715. And the next one, we're looking for the notes payable current. Oops. Vehicle note payable current. Now, we're lumping all of these together, all of these vehicle note payables together, because we're not going to show them as separate notes payable. And we'll notice we're throwing all the interest expense together as well. Again, we wouldn't have an interest expense for every single notes payable that we have. We just have one interest expense. And was it 547.17? I better check that. That looks right. Add line, cash. And we're going to 1262.17. That is your credit. And save it. And I'm going to come over here and indicate that I've actually created that transaction. On the 28th, we paid the other vehicles. And we have to look at the other amortization schedule for the other vehicles. Remember, he brought some vehicles already into his company that were partially paid for already. And so if we come over here, drag this over, you'll see that we have a beginning balance here of 28,000. And well, that doesn't sound right to me. I thought that was 30,000. I wonder if I have two of these exhibit twos out there. Well, for right now, we'll just go ahead and go with what we've done. 391.65 is the interest on it. More. Add a journal transaction on the 28th. Paid payment. Existing vehicles. Just anything. I mean, these I'm not grading your descriptions. And just anything that would kind of say this is what I did on this particular one. And again, so I'm looking for the interest expense. And the debit, it was at 315. No, 391.65. And the next one is the same one that we just did. We had another debit to your notes payable current vehicles, and I think it's down toward the bottom, at least on mine. And that one is $285. And add a line. And of course, the cash is going to be the total. And my credit, I want to make sure of this. 676.65. Never hurts to double check. That way you don't wind up having an error. If, and then call it an unnecessary error. Okay, back over. And we can wipe this one off of our list. On the 29th, paid the land payment. Same thing. Just a different account that we're going to hit. More, add a journal transaction. This happens on the 29th of October. The journal transaction is paid the land payment. And looking for interest expense. And over here, we got to go back over to our amortization schedule to see what the interest on the land. Now, this is the land down here, 1351.75. Oops, 75, not 4. Put us out by a penny if we didn't change it. And over here, notes payable current on the land. So come down to you find your liabilities. Land non-current, land current. And we probably should have been a little more consistent when we wrote all this stuff down, but anyway, the principal here, the note payable current is 468.16. Add a line. Now you're looking for the cash now. And it's going to be the total of those two, or 1819.91. Have a difference of 0? Good. Save. All right. Back again. Time back to this one, Exhibit 1. And again, it's always a good idea to check them off when you go. Record depreciation for other vehicles. Assume a $50,000 cost, 3-year remaining useful life, salvage value of $5,000. I'm going to go back over here to my amortization schedule, and I'm just going to put in a kind of a general formula for computing this. So the cost in this case is $50,000. The salvage is $5,000. And the useful life, they said it was 3 years. So that since we're doing this by the month, you have to make it 36. Okay, so here's the formula. It's equal to, open parentheses, this guy, whatever's in this field, minus whatever's in this field, close parentheses, front slash, whatever's in this field. So basically, I'm going to take this minus this, that's in your numerator, and this is your denominator, $1,250. So come back over to Wave, add a journal entry. This is on the 30th. And just about always when we do that kind of thing. So depreciation on, which one are we doing? Other vehicles. And down here, we're going to find depreciation expense. And again, since it's all the way down to the bottom, let's just type it in and see if we can find it. Maybe down here further. depreciation expense, $1,250. Uncategorized income. I'm going to drop that down and we're going to find um, accumulated, oops, plug my battery in here, otherwise I'm going to run out of juice. Yeah, this stuff is just like a real things come up. Okay, so we're looking for accumulated depreciation. Um, in this case, it's the vehicles. Again, we're not going to try to separate those by new and existing. We've done that up here. And just so you know, what's going to happen is you're going to have a big spreadsheet. And on that big spreadsheet, you're going to have every asset that you have, every capital asset that you have, when it was acquired, what the acquisition cost is, what your salvage value estimated is, and the estimated useful life. And so it'll calculate that. And all you do is just pick up, you're just going to be picking up the totals. But behind the scenes, you'll have a line for each one of these guys. And save that one. Come back over. Record depreciation on the new truck. Assume it'll have an 8.5-year remaining life or 90 months and a salvage value of 13,000. Okay. Now I'm just going to go right back over to the spreadsheet that I had before. What was the cost? 71.5. What's the salvage? 13,000. What's the useful life? 90 months. 650 bucks. Back over. Add a journal entry. Back over here, make sure you pick up October. The reason you want to make sure of these dates is because I ask you every month for a profit and loss statement or an income statement and a balance sheet. And so the balance sheet's not such a big deal, but the income statement, if you don't separate those correctly by month, you're going to have an issue. Okay. All right. So type in the description here. We're going to have depreciation on the new truck. Down here, find depreciation expense. And you may have to come down here a little ways to find it. 650. Oops. 650. And on the other hand, what we're looking for is the accumulated depreciation. Now, this may be under accumulated, maybe under depreciation and amortization and assets. You just have to see which one you put it under and find it. And so we're looking for accumulated depreciation vehicles, 650. Come down, save it. All right. Back over. Highlight it, make it go away so that you know you've taken care of it. Record depreciation on the building. The building had an original cost of 320, a salvage value of 32, and useful life of 30 years. And I can tell you that that's not correct. The original cost on that building was 400,000, and I can't remember anymore. I think I assigned 62,000 in 30 years. So, well, but for you, since I've already said that this is what your thing looks like, whatever it looks like, that's what you're going to use. Okay. So if I come back over here to my amortization schedule, I have $320,000. My salvage value is 32. and 360 months. Now, if I made the change, this won't come out to 800. In other words, if I made the change on yours, it could look something like this: 400,000, 62,000, and 240, I think. Anyway, uh, that's not what this one says, so I'm going to go with what it says. And the next time around, I'll make sure that I've corrected that. And so we're at $800 on the building. Back to Wave. Add a journal transaction on the 30th of October. Again, make sure you get your dates right. Appreciation on building. Find depreciation expense again. And it's for 800. Come down to this one, drop it down, and find accumulated depreciation on the building right here. And it's 800. And save it. All right, back over. Get rid of that. Boom. Record depreciation on the office furniture. The furniture had an original cost of $2,500, a salvage value of $700, and remaining useful life of 2 years. 2 years. That's 24 months. So 25, 7, and 24. Come back over. 2,500, 700 salvage, 24 months, 75 bucks. Back over to transactions. Add a journal transaction. On the 30th, depreciation on furniture. Come down here, find depreciation expense again. Depreciation expense, 75. And down here, you're looking for the accumulated depreciation on the furniture. Building office furniture, right there, 75. And save it. All right. Come down, get rid of that. And the last one, record depreciation on office equipment. Original cost 10,000, salvage of 400, useful life of 4 years. Back over here, 10,000. Looks that say 10 or 1. 10,000, 400. Useful life of 4 years or 48 months, 200 bucks. Back to Wave. More. Add a journal transaction. Go to the 30th of October. Depreciation on equipment. And I'm going to put in office here. Come down here, find depreciation expense. $200. And down here, accumulated depreciation on the office. No, it must be this one. It should say office equipment. And notice, I mean, even if you had it wrong, even if you put it under furniture, got them confused or whatever, it's still going to come out. It'll just be a misclassification. And it should have been one thing instead of another, but it'll still work exactly the same way. And that should be all of them. Come down here, mark this, says I know I did it. Record the initial trial balance. We already did that and loaded it up. Now, there are no rumors. Printed October 30th trial balance to file. Load this up into Georgia View. And actually, all I've asked for, I think, is the income statement and the balance sheet. So let's go back over to Wave. Reports. Let's do the income statement. And notice that it's not showing anything, and that's because of the dates. Change the date to October the 31st. Update report. And we have an error. I believe we have an error. Let me see the details here. 375, 74, 81, 60. Well, I'm just not sure where it's at. I'm guessing it's right there. I'm guessing it's right there, but I don't see it right off the top. Yeah, that looks right because that's Mary's 1575 plus 1500 for Jones, I believe it is, the very first one. And that looks right. And cost of sales 375, that looks right. 15.7, depreciation expense, office supplies expense, telephone, landline, utility 690. Okay, so it's either in, it's in one of these two guys right here. This one looks right, so I'm thinking it's right here in this one. And if you use the same one that I did, it may in fact be right. Just go back and check and make sure that for those entries, that your interest expense is right for each one of them. So let me, right quick, let me just check that. Anyway, once you're done, this is the one that you'll export into PDF and load up. And the other one that we're going to do under reports will be your balance sheet. And if I put this down here as the 31st and update the report. And usually I like the details. That way if I have an error, I can find it more easily. 822, 468, 69. And if you add this plus this, you're going to get 822, whatever, 468, 29, 488, 69. So you'll get that same number when you add those two. But again, I want to say that this may not be incorrect. This may be correct. It's just something that I may have changed for one class and hadn't changed for this class. So you want to go back to accounting, and the transactions you're looking for are the ones that are the payments on the land and the building and so forth. Okay, and interest expense 600, that looks right. That one does. Anyway, make sure that I put in the right numbers. And let me see here. 715, that looks right. And let's see here, on the existing vehicles, this is the one that I wasn't positive about. 391.65. So let's just go over here and just check and make sure. See, I want to say that the beginning balance here is 30,000. I come back up here to the top, the land, several vehicles, 30,000, 12%. That's the issue. 30,000 to 12%. So the beginning balance here, 30,000. And I'm going to see what this thing is. I don't know why that's there. Okay. So it's equal to PMT for payment. And there we're going to have 12%. So it's 0.01. 0.01 per month, or I could put in 0.12 divided by 12. I don't need to do that because I've got that one as 1%, comma. Then what we want to put in next is the number of payments. And it said 3 years, did it not? Let me make sure. 3 years. So number of payments is 36 months, comma, 30,000. I don't know how that got confused. And so your new payment is $996.43. So I'll have to come back over here and fix all of this. I'll have to show this as a negative number. Times -1. Now I think it's fixed. Okay, so 711.43 and 285. I'm gonna come back over here. And this is as hard as it gets. Come back over here for vehicle not paying. Where's the what happened? Well, there's a difference. So that hasn't even been recorded. So come down here, we're going to add the interest expense. And this is what happens when, if you make a mistake, you got to go back and fix it. And so it was clear to me that I had a mistake. And so now we're going to fix it. And 711.43 is the interest expense, add a line. And the cash, 996.43. Over here. Save. Okay. Now if I come down to reports, the profit and loss again. Remember, you always have to tell it the date. In this case, I only have to put in the ending date because I didn't have any transactions before the 1st of October and update the report. 7161.82. I can tell you, that still doesn't look quite right. Something's missing. Something is missing. Well, if you came up with 7161.82, I'll send you an adjusting entry later. But just go ahead and then upload your reports. I just don't understand why that's not coming out. Made a mistake someplace. Let's look at reports. Let's look at the balance sheet right quick and see if it pops out to me on the balance sheet. Details here. American Trucking, that's right. Jerry's looks right. Jones looks right. Levinson looks right. Billboard Supplies looks right. That's right. That's right. Because we had 300 and then we took back 50. So that's all right. 800, 75, 200. And this one should be probably right because we started out with 73,000 and we added some more. Okay. Buildings, this could be our issue right here. This one's right, this one's right, this one's right, this one's right. I'm not sure that we did the buildings right because that was put in at 400,000 initially. And hmm, okay, well, I'll tell you what I'm going to do. I'll just send you, I'll send you a an update, and all you'll have to do is make the entry that I send you. Okay, and that'll get you fixed. All right, well, let's close this one off before it goes crazy in terms of time. And again, I'll take a look and see. I believe I know where it's at, but I want to make sure that everybody's on the same page before I waste any more of your time. Okay, so let's get out of here now.